Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 26, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. What you'll see right now, again, a couple of things I've been pointing out over the last several days throughout the week is that price has been compressing within this range here. Very narrow range. You can see it down here. We've been talking about a 7-day narrow range, 5-day, 6-day, 7-day. It's now an 8 and developing a 9-day narrow range. So it's very, very much compressed already. One thing we saw in the previous session was a failure to hold below the previous low. We also saw a rounded bottom developing below that zone, below the 30-50, 30-60 zone. And one thing I mentioned yesterday is if we can reject this area, we start to slingshot back higher within the range here, back toward 3100, 3110, 3120 and higher, right? Overall, yesterday played out very much as we expected. There was a lot of back and forth sideways action, but by the end of the day we did get the squeeze, and we are now back above the 3060, 3063 zone. Now this is very interesting right here because, again, in a narrow range here, just call this the narrow range, if we push to the downside and failed to break down and are now slingshotting this way, then we could use this pivot low and project higher the forecasted amount that we're looking for, 319 points, 300 to 320 points, right? 300 points from this low. That low is right around 3K there. And so that puts us right at 3,300 as an upside target based on average range here and based on the 8-day narrow range. So over the next 8 sessions, call it 5 to 8, 5 to 10 sessions, if price can continue to hold 30-40, 30-60 here, right, we have a good shot to get to 3,300 ahead. Again, keep in mind we are in an uptrending channeling market right now. Again, every market will fail at some point to continue to hold its pattern. But for right now, until proven otherwise, we are in an uptrending channel here, and we are building energy at the bottom. We saw a failed breakout low yesterday. This could be a 2-week rally here that takes us into 3,300 very, very soon. Again, likely within 8 days. So if price can continue to hold above 3060, 3050, we have a good shot to continue higher. A failure to hold that zone or a breakdown through yesterday's lows, 3K, opens up the same move but to the downside, and that could take us easily down toward 2775 or perhaps a bit lower. So again, right now a lot of energy. It could still blow either way, but right now everything's pointing to the upside until proven otherwise. Okay, that was the long story on the ES. If you take a look here at the NQ, you'll see that the NQ here has been channeling higher as well. One thing we've been watching here is the key range. You have this key range right there, key range high. Key range low is down here, and that's your key range. The midpoint of that key range is right here. That's your mid. And at the moment, price got above it and failed back below it. We're still trending higher as indicated by the PIMA trigger zone. Every time price gets into the PIMA trigger zone, it's been a buy, 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 right? It's been a buy. So it was a buy again yesterday. Failed new low, a pop higher. Doji right now with compression. It's clearly built up energy as well. And if you look at the last 8 days here, we now have a compression that is developing here on the ADR indicator. So about 900 to 950 points of range could be seen ahead. And that is similar to this move here. From here to here, that was about 900 points, and that's what we're about to see a range of that many points again once we get a breakout. Now again, which way do we go? Everything's been trending up right now until proven otherwise. Hard to bet against another upside break. But if price does fail to hold 9,800, that opens up quite a move to the downside, which could take us back toward 9K very, very quickly. So again, keep an eye on 9,800 as the downside break zone. But until then, right now, everything's channeling higher. 10K is the key level to watch today. As long as it holds 10K, it has an upward bias. A failure to hold 10K starts to work downward. All right, let's take a look now at crude oil here. Now with crude oil, this is the one starting to show weakness ahead of some of the others. And if crude oil is dropping, then perhaps the ES and the NQ may fail and follow. Remember, if price can't hold 30.50 today for the ES or 10K for the NQ, things start to fall apart quite a bit. We can test those levels, but got to hold them. Right now, the ES and NQ still, while they look strong, the crude oil here got a failed high above the previous high into that 39.50 level. 39.50 is the previous week's close. We went offered through it a couple days back, and now coming back to retest it, we're seeing rejection. We're now approaching the previous session's midpoint, and if it can't hold that mid, you start to open up more downside ahead. So this is going to be very important here. Yesterday's mid right here, 38.16. We're already failing off the 39.50s. This is what I mentioned before. Based on the fact that we rejected 40.5, based on the fact that we've rejected 40, and now are rejecting 39.5. If we can't get back above 39.5, it opens up a return back toward that 34 we talked about yesterday. So again, we will see here how this continues to develop, but 39.5 is the key level. 38s here is a zone that bulls may want to defend for a shot at pushing through 39.5. Failure to hold 38s opens up much more weakness ahead. Lastly, taking a look here at GC. Now GC has been very, very interesting here. Again, we are at an edge, so you can see we got to new highs and are sitting above these highs back here at the top of the range. Normally, as I've already mentioned, I would say we likely have a rotation coming back the opposite way. Fade new highs, fade new lows until proven otherwise. This is where things get interesting, is right there, this breakout. That breakout after things got coiled led to the new high, and now we're pulling back. So this is still an opportunity here where this could explode to the upside, perhaps with one more shakeout leg. So if price were to drop down, say into 1750, that could provide a rejection opportunity, and that PIMA zone retest here with the rejection could lead to a nice push higher and that 1831 target we've been talking about. So again, 1750 to 1760 is a zone that bulls want to keep bid on any pullback. If so, this thing could extend higher given the breakout we saw here recently. So right now, that's important here to keep an eye on. If there's a failure to hold 1750, then perhaps we rotate back to the bottom of the range, and that could still be a big possibility. But given that breakout we saw previously here, perhaps we are about to see a shift to an uptrending price discovery phase market. All right, that is it for now. We'll see how this develops heading into the weekend. Again, happy Friday. Please be sure to like, share, and subscribe. And again, take care, and I will see you in the trade room.